Okay, good morning, traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, October 29th. Do got a lot on tap with US GDP figures. Still waiting for the actual read on that to hit the wires any second, but welcome aboard, guys. Good to be with you guys this morning. Lots of things on the move. Last couple of days, you've seen some major breakouts. Dollar with a nice breakout higher. SPX finally making that corrective move. So we'll go over those levels: Euro dollar, Aussie dollar, dollar CAD, dollar yen, SPX, Kiwi, gold, and sterling. The big movers and what we're following now. If you have any other questions, guys, as always, feel free. Here's what we look like now. So we'll start off with last night's update, but before we do, I just want to get a quick look at the DXY and where we are there. So as far as the dollar is concerned, you made a breakout, okay? Here is the daily chart that we've been tracking. Bear with me one moment. Where was our last DXY update this week? Right here on the 25th. Here's where we were right into the open, okay? And the level that we needed to beat was 93.12 into 93.18. That was near-term resistance, sort of the near-term bearish inval for this move. Key support 92.52. Here's what happened. All right, we actually didn't get to 92.52. That was still last week's low. So that held. Here's the weekly open, gapped higher, resistance, resistance. This not only was a resistance break, but it ended up being an objective weekly opening range break, right? Shifts the focus higher, initial levels at 93.34 and 93.60 is that 50%. Here's the big whopper that we're at right now, 93.80 into 93.87. That's the objective monthly open fact, and it's the key 618 retracement of the decline off the highs. Okay, so if there's gonna be some kickback, if there's gonna be some interruption, this would be the first level to look. Okay, and with the same respect, if this breaks, if this breaches, especially on a closed basis, well, then that's just straight out breakup. Very simple. You're looking for 94.25, you're looking for 94.60. Point being, look for inflection here today. Major critical resistance, confluence of the objective monthly open and a 618 decline off the September highs. Initial support back at 93.18, 93.12. You know, this 618 now needs to be sort of reworked. I don't want to really run with that because we have no validation of a high, but you get the picture. Whenever we do register a near-term turn, or if we do register a high, tack on a quick retracement, the 618 will line up somewhere right around that slope, and that's going to be your near-term bullish inval. A breach above here, and like I said, 94.25. 94 handle will just be a soft target. It really would be 94.25 and above. So dollar breakout, nice move. Coming into a level where you could see a little bit of an interruption. So stay poised here. Any questions on DXY? So the numbers that we did get today, the obviously BOJ, no change there. Excuse me. US GDP came in at 33.1%. Expectation was for 31%. So certainly better than expectations. Again, I don't know if that prompt, that data print will be enough to fuel this leg, this breach above 93.87, 93.79, but that's the level that we need to be. So keep an eye on that today in US trade. Here's the daily chart. Again, monthly open. Objective monthly opening range is at 94. Like I said, that's a soft target, but you know, a breach here would certainly do it for me. Just watch out. If we're going to pull back first, if we're going to see some sort of just near-term exhaustion, this would be the region. Look for inflection off this region with a break to offer acceleration. All right, got all hot and bothered with the DXY here. Excited in the morning, looks great. Yesterday's breakout was long awaited, guys. We've been waiting for some sort of corrective bounce. We thought this was it earlier in the month, right? Didn't last too long. Here we are again. Let's see if this turns out to be a little bit more of a significant turn. Here's Euro. So here's Euro last night. Also, very clean moves, right? We were following this ascending pitchfork formation. We broke. The level that we were majorly focused on was right here at 1770 and 1762, this 9 pip region. That was our near-term bullish inval. That broke. First target 117.19, 117.15. That caught the lows yesterday. A bounce here caught resistance, right? Just broke the lows, and now we're making a move on the 117 handle. Here's euro now. Okay, so on the daily chart, let me take a step back because both DXY, right, on the weekly, coming off of big levels. We've been talking about these levels for months, right? Here's euro, big resistance. Now this has been a little bit messier, right? Here's the high week reversal close at 1835, the 618 of the drop from the 2018 highs at 1823. Once we pulled back below that, it's been really precarious. I'm not gonna lie to you. Last week we closed the weekly candle above that. So technically that would have still been constructive, right? Mind you that we've been seeing ongoing momentum divergence into those highs, never actually materialized. Here's euro on the daily chart, this ascending channel formation. There's the 618, again, 1860 holding resistance on a closed basis. Don't take my word for it. Here's what it looks like on a line chart. Closed basis, turn lower. We're at the monthly open. We're at 117. All right. So an area of which, again, if you're going to see some sort of near-term recovery, a pause, if you will, an exhaustion low, keep in mind we've had a 4-day decline. In fact, out of the last 6 days, we've only had one up day in euro. So could we see a little bit of a pause? Yeah, sure. I'm not really concerned about that. Last limits was for me at 117.14, so I didn't even get a stretch into the 17 handle. So from here, if you're not holding anything, you're looking for new positioning, look for exhaustion ahead of 1760. If this is going to work, that's your near-term resistance. Bearish invalidation still gets locked up there, okay, at that upper parallel. A downside break from here, you're looking for that 786 retracement. That's 1670 and beyond. 1620 would be the next downside target. It's the 2018 high. So cautiously still looking, bearish. Nothing's really changed on that front, guys. We just need to be cautious to chase this from here. Okay? If you're holding shorts from anything above 118, I would just be bringing my stops down to 117.70. Take a little off the table here. Next limit 1670. If you're looking for new positioning, you need a larger recovery towards here for another attempt to try to press it lower. Or if you do get a drive spike low, I actually would be interested in trying to take some sort of near-term fade for a pullback into resistance and then look for another reaction there. But from here, I'd be very hard pressed to tell you guys jump into anything new from here. Okay, it's either the recovery off a larger base support, or if it does whiplash, look for exhaustion back at those upper parallels. Questions on euro? Beautiful moves, beautiful moves. So all things held constant, one of the reasons, again, I'm kind of really cautioning you guys on where we are here is because the inflection that we expect should be telling. Why? Well, it's not only the 117 handle, it's not only that we've already broken the monthly open. Your monthly opening range is just pips less, guys, like 1690. So objectively, if we do break this level today, especially on a closed basis, guess what? That's an opening range reversal trade. Here's the monthly opening range, really nice. This counted as a monthly opening range break, false break. Once you take out the opening range lows, that's a reversal signal all day long. All right, so finally excited to see Momo starting to pick up, momentum starting to pick up on all these trades. The VIX has gone through the roof. We haven't quite reached March highs yet, but we're certainly approaching those levels. So buckle up, right? Buckle up. We haven't even hit the election yet. I mean, this GDP figure, we're expecting 30 plus. So, if we were to take a look at the SPX in a moment, but as far as the dollar is concerned, watch these critical levels. Any questions on euro or DXY at this point? All right, next up on tap, Aussie, another phenomenal one. Really nice hold. It was like clockwork at key resistance. I really hope some of you caught this one as well. So last night we also highlighted this massive move, right? We opened the week, and again, every link, guys, provides you the previous update where we were. Here was the previous Aussie update. We were opening the week saying 71.58, max 71.70s, 71.80s. We're looking for exhaustion off one of these two marks for the move lower. Yesterday, we highlighted that, man, we came right into 71.58. Beautiful reversal, taking you right through Friday's low, the weekly opening range low, downslope support, kept the focus on near-term target at 70.70 to 618, and then right back at critical support, and we're there now. Recall the significance of this support zone, 70.16, 70.42. We've been talking about it for months. I want to say years at this point. Last year's objective yearly open, the 2018 lows, this year's objective yearly open, massive pivot in price. We're there now. So you got the DXY at near-term resistance. You got Euro at near-term support. You got Aussie at near-term support. All of these trades are poised for inflection. Watch it today. Watch it today. Break below this on a weekly close basis opens up the spigot. I mean, there's lots of downside to go, in my humble opinion, if Aussie breaks here. Here's what it looks like on the daily chart. Once again, where are... Well, that's weird. For some reason, all my Aussie daily analysis is gone. Okay, that's odd. We'll revisit that. I'll redress that chart for you. Here was the last Aussie update on the daily charts, just to put things in perspective on where we are, right? There's that 2019, 2018 open right here. 70.16, 70.42, massively important region, guys. Here's the decline off the first. If this is leg 3, right, on a wave pattern, then we're looking for extension 5. Here's what it looks like on the extension. I'm not sure why all this analysis disappeared. I'm sorry about that, guys. But just to put things in perspective, even if this was just corrective, 2 equal legs takes it down to 68.35. Okay. Actually, let me add that. It's right there. Okay. Here's the intraday chart. And here is what we looked like yesterday. Okay. So we were just scraping the top of this zone. Again, I noted near-term resistance last night at 70.73. Okay. Bearish inval at 70, essentially that Friday low, the opening range low for the week. Resistance right at 70.73, really clean, right? Here's the pullback and drilling deeper. Look for inflection here. Like I said yesterday, the favored move is going to be a downside break on the account that we've made a test of this key region so many times. And essentially every time you've rebounded off, the rebound's getting smaller. Here's your first rebound, right? After the break, here's your first rebound. That lasted 3.2%. Here's your second rebound. That lasted 1.9%, right? So yeah, we could get another bounce here, another 1.2%, maybe a test of the resistance. Either way you slice it, our favored move is for us to eventually inevitably break to the downside, 69.86, 69.63. Initial targets on the downside. By the way, 69.63 is just a basic 236 of the entire yearly range. So very, very minor still as far as the levels on the pullback. That's how significant a break below 70 would be for Aussie dollar. All right, so keep the powder dry. We are at support, probing major critical support here in Aussie dollar yet again. Questions on Aussie? Keep in mind, guys, the ECB is on tap. They're talking right now. So I will give you any headlines that I think are warranted during the webinar here, but no change as expected. So not really expecting much from there. If anything, might help fuel this decline. All right, dollar CAD. Here's Looney. Beautiful breakout, also testing a near-term resistance level we've been watching. Here was dollar CAD yesterday. We noted the break of the weekly opening range above 32.25, kept the focus higher. We took out the 618. Next upside target was right here at the 786 retracement. That was 33.47. That got taken out. Key resistance just higher. 1618 extension off the low and 88.6 off the high. 88.6s, guys, by the way, tend to work really good. They're just the square root of 786, another derivation of Fibonacci. Tend to work really good on, I've told you this before, on commodity currencies. I don't know why. Aussie, Kiwi, Loonie, even gold sometimes will tend to, offer some inflection off 88.6. Be that as it may, it's in a confluence region also with the 1618. That's 33.75, 33.81. Watch for inflection there today. Topside might be a little bit tired getting to that region. Near-term support now at 32.90. That gets lifted from last night. Right there at the median line. And we'll leave bullish inval all the way down there at that swing high for the week. Looney levels. Looking pretty good. Here's the extent of it. Today, already, unlike Euro and some of those other pairs that are like tempting the monthly opening range break, here's your monthly open. Here's your monthly opening range break. So if this is legit, we need dollar CAD to settle above 33.20s, okay? Like I said, near-term resistance 33.84. We're checking that now, but at the end of the day, look and see constructive above 32.90 if this is going to work. Really nice moves. And again, the dollar's been so battered, so beaten. And if you get a bout of risk off, which is what we're getting now, let me clean this up a little bit. That's all you need. That's the catalyst to get this trade going. Questions? Looney. Possible slope there. I might want to look at. Interesting. Okay. We'll leave it here on the daily chart. Work with this slope, guys, right off the low. Basic pitchfork off the low. High. Low. Pretty nice reaction there at the 25% parallel. We're checking the median line now. See if this offers guidance. All right, number 4, that is Looney. Number 5, the abomination itself coming into a radical region of support as well. All you need to know for dollar CAD is this weekly chart. I feel like I've been showing you guys this for months now as well, always highlighting the same region, 104.12 into 104.44. Now we have 104.11, 104.1 rather in the intraday chart. I'll show you in a moment, but on a weekly basis, guys, absolutely critical. Okay, absolutely critical. You're looking at the 100% extension from the decline off the late March high that you made. You have the lows from 2019. You have the lows from July. You have the lows from September. You're there now. Watch for inflection here. Dollar yen's at critical support. Weekly close below 104.12 is necessary to keep the short bias going. Here's the daily chart, right? We worked with this pitchfork off the low on account of, all right, well, maybe this is a bigger turn with that 104 barrier holding so well back in July and September. Maybe we have a bigger turn. It's a great way to use these pitchforks as a way of invalidating near-term trends. So here we go. The ascent broke that 25% parallel. We sat on the lower parallel for literally 4 or 5 days. Here's the break. Here's a third day below. This is done. This is support. We're looking for some sort of reaction here. Intraday looks like this. And here's what it looked like last night. Right? Told you guys, watch. This is a very, very key support level. Resistance, again, is at 104.45, 104.44. We had hit that. We pulled back in overnight trade. Again, in Asia, we tested that region once more as resistance. Another test of key support still has 104.02, 104.12 holding. The near-term slope is beautiful. Dollar yen doesn't get these trades very often, guys. I always, kind of make very mindful to remind you guys of that. So when we do, respect the levels as long as they continue to play. Loving how this is just super clean. So near-term resistance, 104.45, 104.65. Bearish inval, nothing changes, 105.20. Break lower from here, man, there's so much room. Initial targets are 103.43 and 102.78. Now you have to keep in mind one thing. With the market condition that we're in right now, with the risk-off environment, that's going to aid dollar and yen, right? So whereas some of the other dollar crosses, we favor the dollar strength in account of the risk off, right? Aussie lower, euro lower. Dollar yen might not just be a drop, right? We always kind of get that push and pull with the risk off scenario as yen gets that bid too. So I'm more cautious here. I'd rather, if I'm taking dollar strength positions, I'd rather take those actually elsewhere, not versus the yen. So just a word, a note here. This might actually be a better synthetic hedge. So if you are extremely set on the long side of the dollar on the other crosses, this is one where you might actually play the break lower if the risk off intensifies and we see a break below 104, because there's a long way down. The next level isn't even until 60 pips. So huge inflection point, major support. You are marking some, divergence here with price action making a lower low, the oscillator making a higher low. So, I think you get a little more noise here, some back and forth. Just know that 104 level is absolutely paramount. Don't mess around with it and respect the inflection off 104. Any questions on dollar yen? All right, SPX. Here's what the SPX looks like, especially today on the back of this, blowout number for GDP. I believe that's the highest read that we've ever gotten on a quarter read, 33.1%. Here's what the SPX looks like. Getting some of a kick, right? Getting some recovery of it, but man, the damage was done. So the levels that we talked about in the SPX, guys, again, you can always follow through with the previous update. Here's where we were on SPX on the 26th. We were in this channel. We noted this major key support bounce, and we said, look, resistance at 34.13. You had bearish inval just higher on that fib, 38.2. We're looking for failure ahead of that, a break lower, and the big region was right here, 33.40. A couple days later, that rally failed right at resistance. We sat there, right? We sat there for a while, pulled lower, broke, and we sailed through 33.40, big level. Favorite Fibonacci confluence is 618 off the low rather, 100 off the high. Beautiful inflection. There's the drop. I'm looking lower, sub 33.40. Right now, I do want to curb my expectation for the downside immediately because we are seeing sort of this straddle at the 786, which is 32.82. Bearish inval, big support down lower. 32.19, 32.26 is the objective yearly open and a longer dated 100% extension. Here's the daily chart for SPX, guys. Right? So this is the 786 retracement we're sitting on right here, 3260s, right? 3280 rather. We're straddling that right here. But the next major level on a daily basis is still going to be that yearly open, 100 off the low. It's a longer term. 3226, 3220. Bearish in about 3397. So let me mark that one down there. Something like that. Clean moves. I got a really good praise email from someone on the IG desk because I gave him this setup earlier in the week as we were opening, noting that the big level I was looking for was 33.40. I wanted to see that execute before we saw a resumption. Well, 33.40 did not hold; it broke. So that suggests that even if you get recovery, man, better watch out while below that region. All right, Any questions on that front for the SPX? So here's the operative, slope we're working with the daily chart, just as a reference. Clean that up a bit. All right. Next up on tap, last three here. Kiwi, very similar. So that was 4, 5, 6. Here's number 7. Kiwi is very similar to Aussie, right? We ran into major critical resistance. Loved the move. Again, very, very similar. Here's what Kiwi looked like earlier in the week. The region in focus was 67.23 into 67.33, a 10 pip region of resistance, defined by the 100% extension of the ascent, the 786 retracement of decline, and slope resistance. So on a daily chart, I mean, what a great level to look for inflection right here. Objective 2019 yearly open, again, that 100 slope resistance came right into it. Momentum, really tight hold at 60, right? Exactly what you want to see. Nice move lower. Monthly open support is just lower from here. You're looking lower sub 67. Here's what it looks like on the daily chart or on the intraday chart. So I do have some slope here. The preferred level for us to drop into from this region would be last week's open. I don't really want to stress last week's open per se, but more so that 618 retracement of the advance. So that's like 6606, 6607. Let me get rid of that. That's the next inflection zone, right? So I wouldn't play a squeeze into this region if you're not already short, because you only got a couple pips left. But if you are holding shorts on this, note this low off of slope, right? 25, the 75% parallel. Ideally, you get that stab just lower near 6606. Near-term resistance 6685. Bearish inval, like I said, 6704. Boom. Next downside break, you're looking for a test of the monthly opening range lows. That's basically 65, 47, 65 50s. Beautiful turn. Beautiful turn. Questions on Kiwi? Here's the Kiwi weekly chart. Look at that. I mean, 618 of the drop, couldn't get a weekly close above. Nice reversal. See if we can follow through on this. Again, dollar strength, right, on the way down. Okay, I do want to take a quick segue to sterling, and then we'll hit gold. Here's number 8. British pound has been pretty impressive, right? Despite broad dollar strength, sterling has kind of been able to hold its own. It has been weaker, but the break hasn't been anywhere near the type of impactful move that we've seen across some of the other crosses. So I'm not really a fan of sterling here, guys. You know, for me, I loved this reversal. I thought we were actually gonna get a larger pop, and maybe this was gonna buck the dollar loss, but or the dollar strength, which would push it lower, but just it couldn't stay out of it. Had to fizzle lower. So look, I think this is again one of those trades where if you're trying to play dollar strength, this is not your best bet. For me, you know, I think this could still fizzle lower and then continue to kind of chop sideways. I'm not really trying to track it too hard. The 618 retracement does give you a better view on the bottom side where we should look for support on a break lower from here, near 2866. But, you know, I don't have a decent grasp on positioning from here. Look, anything on the short side needs to be against that high, right? It's already like a 70 pip, way more, 100 pip stop, nothing I'm interested in. So if you are holding shorts, take a little off the table here, maybe. At least bring your stops down, if not take any off. The big level would be just below 129. But it looks on whole, on its face, at least, as an attempted break of near-term uptrend support. Bear flag, whatever you want to call it. Here's your monthly open, which I don't like to highlight the monthly opens here because I'm using the TVC. or IDC rather feed. So the monthly open will be different if you're looking at FXCM feed or if you're looking at IG's feed. But just to put things in perspective, again, could get a little bit of a hang up here before the next break lower. Questions? Okay, you don't need that. All right, that is the last on my list of FX pairs. I see your question there, Ted, on CAD. Yeah, I'll look at that in a moment. Let me just hit gold real quick. Did anyone get surprised by this? I certainly hope not. You know, it's just funny because you talk to all these guys on the desk and you all across the city and on various trade desks, and markets down, gold up. They point to the quintessential, you know, uh, sort of logical move, right? Gold as that safe haven. Well, it is that's true, right? Gold can be a very strong safe haven when you do get risk off, but where gold was poised, where gold is in trend, was ready for the pullback, guys. We've just been waiting for the catalyst, and guess what? Dollar strength was the only catalyst that you needed. Okay, here's gold on the weekly charts. We've been talking about 1932 literally for 2 months. 1932 was the reversal week close after the record high was posted here in August. You had trend line or channel resistance there again for the last 3 weeks. We've been noting that 1932 levels, what you need to close on a weekly basis to clear it. Well, we tried for 3 weeks. This week, didn't even try to make a pop back above 1909. We just headed lower. So yeah, I'm looking for 1836, 1803. Guys, those have been the same two targets we've been talking about since the initial turn back in August. We missed it, obviously, on this bump here, but the recovery failing at slope does, in my opinion, keep the focus on that 1836 level. Okay? Not a popular trade. No one wants to be bearish gold for some reason. I always get a lot of heat for it. But the technicals are the technicals. And here's what it looks like again. Now, whether you want to adjust this slope to this high to keep you inside, it kind of jacks up the bottom side a little bit when you do that. But at the end of the day, it's a clean slope. It's a clean slope, okay? The 618 or the 38.2, excuse me, retracement of decline off the record high was 1935. That's the same level on the weekly chart that we noted, 1932, as the reversal close. So nice area to find some resistance. Guess what? Here's resistance. Here's resistance. Again, the downslope was in that as well. This is a break of what? If things materialize here today as is, this is an objective break of the monthly opening range lows. Not Mike Boutros' opinion, not SB's opinion, fact, right? So if that is indeed the signal of an opening range break, then we should be looking for that extension into, you named it, 1836, 1837, right here. 38.2, the entire advance of the yearly range. You also have median line support there for the pitchfork we've been following off of last year's late low and this year's low. That's your next level to respect on the downside. 1803, that secondary target I told you about, well, that's 100 off the high. So even if all of this is just corrective and we're still going to rip into $4,000, you could still get a drive into 1803. All right. So man, I just hope some of you caught this. I know a lot of you in this room are big gold traders. So this is something to look for. 1867 was the first soft target that we noted. We broke through that. So at this point, here's the last gold update. At this point, that 1867 broke. Next level is 1848, soft target, but really 1836. Like I said, that's where we'd really like to see a little bit more of a larger inflection, a larger price reaction, a bigger recovery. Questions on gold? All right, that is number 9. So number 10, CAD yen, huh? Is that what you're looking at, Ted? Let's see what's going on there. Where's my mouse? Oh, My mouse battery is dead. One moment. I knew that was going to happen. Okay. CAD yen. Yeah. So bearish, right? On so many accounts. Bearish on account of the relative performance in and of themselves of dollar CAD higher, CAD weakness, dollar yen uh, holding ground, bucking dollar strength, meaning yen strength. So yeah, I think CAD yen lower. Looks like a break of a near-term consolidation range. Objectively, Ted, this is a simple break of the monthly opening range lows. So you're automatically, inclined to look lower below 78, 75 on an intra month basis. What I would like to do on a move like this is I'd like to see if there's some slope to offer guidance. Doesn't look like there's much here. Okay. I'd be more inclined to work with this. So when you do a modified formation, guys, it's just taking this slope, right? It's just taking the basic slope, the headline slope, and adjusting the pitchfork to that basic trend line off the highs. So if ever you're wondering if the 3 points reference make a difference, a lot of times if you just shift it or you modify it, you're just working with basic channeling action. And the basic channeling action here would highlight or suggest near-term support. Man, why are all my settings jacked up? Down here, right? And if we take an extension of that move, the 100, oof, where's that the 618? That's the 6. Nope, good. Comes up a little earlier, like here, 77.40. Monthly open resistance. Well, first of all, resistance, I'd look right at that median line, but monthly open resistance, 79.15. That'd be my bearish inval. That'd be my bearish inval. Does that help, Ted? This is a daily chart, right? Not really getting too into the nitty gritty here, but just to replicate, obviously we were looking at a downtrend already. Here's the new slope that we just added. So let's get rid of this near-term slope. Yeah, quite a play. Yep, I like it. Here's your monthly opening range lows, which you've already broken. Keep your eye on resistance ahead of that median line. Downside target 77.40 should offer you a nice level. Ted says, that's great. Thanks. Yes, helps a lot. A good confirmation of my thoughts. Right on, Ted. Cheers, mate. Good trade, man. I know you're the only one. Someone here must have brought this up because I don't follow this. So anytime I come on one of these charts and I see analysis, I know that thanks to you guys, one of you guys brought my attention to it. So guys, we'll wrap it up there. Hey, listen, it's still a lot of event risk, okay? I know you're all gonna have an itchy trigger finger when you're seeing this kind of volatility, and it's great. It's there, but I just want to caution you guys, make sure we're still playing defensive. Make sure you're still lowering your position size on average in this extreme volatile market environment. Don't forget, don't make a move just on GDP today or just on BOC or what the BOGA said or what the ECB said. You still got major event risk heading into the weekend, heading into next Tuesday, obviously the election. There's a lot. There's a lot the markets are going to be digesting. So make sure you keep the powder dry and stay a little bit more nimble. Best of luck trading, and I will see you guys on Monday morning on the free session and right back here on SB on Tuesday and Thursday. Best of luck trading, guys. Cheers.